So, good morning, good afternoon, good evening, traders from everywhere. I'm so glad to be back again. For a while now, I've been swing trading. I've not gotten enough time to day trade. But today, being NFP, I decided to stare at the intraday charts, and wow, I I lost to NFP. But losing to NFP doesn't mean that I just left the market. No, I still looked for opportunities, and I got what I was looking for. I'm so sorry. For a while now, I've been away. I've not been giving you guys some videos on YouTube as usual, but on this one now, I'm going to be giving you a video on how I made this profit. This is currently around 16-hour trade, but initially, what I'm targeting on this trade is around 29-hour, but I've made just 14 hours so far, 14 to 15 hours so far. So let me give you a brief walkthrough on how I entered the trade. So looking at this is not based on key levels as I've always thought. It's not based on key levels. Now it's based on smart money concept, supply and demand. So let me give you a brief walkthrough. And the good thing about it is that I was away. I wasn't at home before my screen. I was just with my phone, and I made this. So you can, even if you don't have a PC, maybe you don't have a PC and you're feeling, oh, trading is not for me, I can tell you that trading is for you. You can start up with any device you have. So let me give you a brief walkthrough on that. Looking at this chart, this is Euro USD, and this is the 4-hour chart. And please, I want to tell you something. If you have not joined my Telegram channel, please join there. We are mentoring people for free, and we are giving signals from time to time. But unfortunately, I didn't give this signal. It was just a personal trade. And then if you want to trade using the broker I use XNS. XNS has been reliable, and their deposits and withdrawals don't take time as compared to other brokers I've used before. So, and then their spread is small. That's why I could use a 4 pip stop loss. In this case, I used a 4 pip stop loss, and wow, that's what gave me up to 29 hour. So let me show you everything from start to finish. Currently the trade, I've set break even. You can see my stop loss. You can see my stop loss around here. So that's my stop loss. So let me give you a walkthrough on how I went on the trade. Looking at this market now, the current stage of the market, this market is not trending. Initially, if I go back, I'll see that it was trending downwards, but it came into this zone and it's ranging, forming equal highs and equal lows. So now I'll go to the, this is just a top-down analysis. I'll go to the 1 hour time frame. And what did I see on the 1 hour time frame that made me to pick my entries? Initially, or yesterday, let me get rectangle. Yesterday, this was an order block that respected. This was another block that respected from that highs. Yeah, and then today, while it left that place, it formed another order block. Now, what is another block? You might want to ask. Maybe you've not gone deep into retail. I'm going to be taking you guys deep into retail and SMC. So stay tuned with us. I promise now, I'm making a promise that I'll be trying my best out of my tight schedule to make at least 2 videos a week. So let me give you a walkthrough on this. Now, having this other block, what is another block? As I asked initially, another block is the last bearish candle before a bullish order flow, or the last bullish candle before a bearish order flow. Let me get off this rectangle first. You can see this white candle, and you might want to know, okay, why did you change the color of your charts? I changed the color of my charts because of my psychology. When I have this kind of color, it doesn't get me panicking even if I'm in the loss. And this is just red, this is just blue, and or you might call it navy, whatever. It's just blue and white. So it doesn't really make sense to me panicking than red. When I see red, oh my god, almost everybody, when they see red, red is a sign of danger. From inception, our psychology has been tuned to the fact that red stands for danger. That's why I removed red and green. And white and black, I don't just like white and black. That's why I stopped using white and black. So i'll be using um I'll be using this blue and white. Now you can see this white candle, this bullish candle. That is the last bullish candle before this bearish order flow. You can see now. That is it. This is not a full SMC video. This is just to show you my entries and my exits and how you can get started if this is what you like. Because this is the reason why I love this. Is it's mechanical. It's based on rules. It's rule based. That is why you can, maybe if you're if you're a good physics and math student like I was, or like I am, you can incorporate this. You can use this trading style. It's going to be profitable for you. So this is the order flow, and this is the last bullish candle before the order flow. That is another block. Now, looking at this order block, one thing again that I know is, now if I come down here, or let's go to the forward chart for you to see it clearly. Forward chart, when I come down here, this is an equal low. This now is an equal low. You see price reached here and couldn't close below it, reach here, couldn't close below it, reach here, couldn't close below it, and reach here, couldn't close below it. 4 good times people make attempts to break through this low, they couldn't. So what is that indicating to me? It is indicating to me that liquidity is sitting here. Liquidity is sitting here. And what does liquidity mean? Liquidity simply means money. Money. That means there will be a lot of people looking to buy at support. Remember support and resistance, or key levels like I normally call them. That is where people are so interested in buying or selling. They've been taught that you buy at support, you sell at resistance. So this is what smart money concepts exploits. This is what smart money concept, your knowledge of smart money concept exploits. So let me go back to the 1 hour chart. So back to the 1 hour chart, I highlight my order block. This other block. Now price moved from here after reaching this equal low and couldn't break through it. Now if price broke through it, that would still be a good trade if it moves back here. Reason is because it has broken structure, showing me that there are sellers. These institutional traders are more on the sell, and then these institutional traders, they have their orders sitting, they have their orders in drawdown, they have their buy trades in drawdown. The last buy trade, they started buying all this way, and then the last buy they did was what formed an order block, was what formed this order block. And now this order block, they have to mitigate all their losses. They have to mitigate it so that they'll close out in break even. That is why this works. In more video, I'll explain detailed. This is just a brief overview and a welcome back. So moving further, now price was retracing back to my other block. What do? I would have simply placed a sell limit here. But I didn't do that. Sorry for that. Why didn't I do that? Because if I were to place that sell limit, I would have my entry here, and then my stop loss above here. That would be 26 or 27 pips, around 26 pips. And then me having a 26 pip stop loss, my take profit would be 108. So it's a fair risk it's a very, very nice risk to reward, but I needed something better. So what did I do? I went down to the 15-minute time frame. And I saw that this other block is still good here. This other block is still good here. So actually, sorry for that. Actually, I refined it. I refined the other block. I know that this is the last. When I come lower, there is something called refinement, the last candle. Now in this case, I'm not just delete that, get another one. This case, now what was I looking at? I was looking at the tail of this pin bar. This pin bar, that was what I was looking at. Now I protruded it here. You see that price has touched it. Price has touched it, and after touching it, is about to sell. Now one could have still placed his sell limits immediately. You would have made money, good. But what did I do? I went down to the 1 minute time frame. You see, I've already said break even, but that's not what I want to. I went down to the 1 minute time frame and I looked for a change in character, or a change of character. Remember, if you've been following my videos, you'd and you've watched the video on top down analysis, you know that whenever we pick an entry, maybe we want to buy, we want to sell, I would go and look for head and shoulders pattern or double top. So the same scenario applies here. I'm going to look for not head and shoulders, not double top, because this is not retail trading. That one is called retail trading style, and this one is called smart money concepts, aka SMC or IT, which means institutional trading. Now I see the same thing here. Now this is my order block. This is my order block. In this case, you can see the last buy candle, or the last bullish candle before the sell, before the bearish order flow. This is the bearish order flow. You can see the bearish order flow. And one good thing is that it broke previous structure. That is what many mentors won't tell you, that it must break previous structure. Now look at this. This was in an uptrend. What will justify me buying at that order block? Because can I just highlight anything I see? Why didn't I take order block here? No, I won't be taking order block here. Reason, because it did not break structure. Now this, what is this? The market structure. The market structure is telling us that this is in an uptrend. It keeps breaking the previous highs, keeps breaking the previous highs. That means it still remains in an uptrend. But in this case now, it now breaks the previous low, telling me that yo, a downtrend is resuming. So that is my first confluence. Second confluence was, first confluence was that price had reached the 1 hour order block, that is just here. This 1 hour order block, you can see this is it, and just tapped in, and then this reaction. Second confluence was that it is showing me a change in character. So I don't need any other thing again. And then this market has broken structure. So I see a lot of confluence here, and then I'm looking to sell. I placed my sell limit at the base of the other block, and then my take profit, I just added 1 pip plus spread. The spread is 1 pip, so 2 pips above 8. You see this reaction, it didn't take me out. So when I entered the trade, it started moving nicely, and you can see the move. It's currently, how many pips have it moved? Let's measure from entry, this is it, to here. Currently 70 pips, and I was risking 4 pips. I was risking just 4 pips. I'll put this here. I was risking 4 pips. This is it. My stop loss was at 1.31, I guess, 1.0031. That's where it was. So that was just 4 pips, and then 4 pips. Initially I used 0.1 lot, which is a mini lot. So I used a mini lot, but at some point I took 50% of the position out. So taking 50% of the position out, and then let the others run. That is KHRH. That's it, as simple as that. So there is also a secret here that I want to reveal, that as a retail trader, it's a sad truth. It's a start trade for retail traders. I think this is it here. If with your knowledge of no other blocks, you can sharpen your your retail trading skills. Now this is a trend line, and a lot of people will be looking to buy here. A lot of people will be looking to buy here because they've been taught that once price jumps off from the trend line, you can see one touch here, you can see two touch here, and then you can also see the third touch at this place. So they might be feeling okay, it's time to buy this market, it's time to buy this market. But what hindered me from buying now? I know the price has tapped into this other block and liquidity is sitting here. Remember, this trend line is carrying liquidity, meaning that at once price touches it, a lot of buyers will start buying here, giving us more reasons to be in this trade, because once liquidity is taken out, many traders will be in drawdown, and them being in loss is a fuel for our trade to go in deeper profits. So that's it. That's it. And then I intended to make a short video, but it seems we've gone farther into it. So thanks for your time here. Now once this trade, you see my take profit target here, take profit target down here, and then this is where the price is. It's remaining a few pips to reach there. If it doesn't reach there before market closes, well, I'll be leaving it, because now I've been swing trading, so it's no new thing leaving a trade over the week. It's no new thing leaving a trade over the week. And secondly, I've already made nice profits from this. I've already set break even. I've already set my stop loss at break even. So why do I panic? Why do I? Although market my gap, but I don't really have a fear for that. I don't really have a fear for that. So thank you very much, guys, for watching this. Thank you very, very much. I sincerely appreciate you, and I promise that, like I said earlier, I'm going to be dropping 2 videos every week, and then on my Telegram channel, I'm not going to be dropping signals now. I'd rather teach you how to trade. I'd rather teach you how to trade, and then stay tuned. A lot of things are coming by. If you need a broker, you want to get started in your trading, Xness is a nice broker. Join using the link in the description. If you want to join my Telegram channel too, the link will be in the description. Everything will be there. Good. So thank you, guys, and cheers to your success. Goodbye.